It's Sunday, the 26th of October. I just thought we'd have a look at the ASX200 chart. It's had a bit of a bounce the last 2 weeks. We're up about 9 days in a row now, but we are reaching what you'd expect to be a bit of a resistance zone. Generally, when you have these support zone, you can see around this blue dashed line around 53.70. Once that retraces and comes back to that, you would expect that to act as a bit of a resistance zone, and also you can see this Fibonacci retracement of this move. Generally, when you have sort of a bit of a bounce, you're expected to sort of halt in this 50% to 61.8 sort of region, and then if my sort of call is right and we're going to head back down, you'd expect it to stop here. You can also see the 200-day moving average, which is right on where we're at the moment. So that you'd expect that to have similar properties and act as a bit of resistance as well. This pink zone here is where the sort of long-term support level is, I guess, around between 5,000, 5,070. So if we head back down and we don't hold this 51.20 level, this is sort of the line in the sand, I think, if really need to hold this level, and I think we might get there in the next, say, 2 to 3 months. So yeah, it's still not looking too good at the moment. I still think there's a lot of weakness in world markets, and the ASX 200 is not going to be immune from that. So probably sit on the sidelines still. This is a chart of the Commonwealth Bank. You can see we've had this move from the GFC low up until $60, and then it's repeated again from the US credit rating downgrade sort of time to mid this year, where it's got up to around $80. And just in the last few weeks, we've seen this trend line here breaking and this sort of rising wedge playing out, and it's come back and tested this sort of mid-level support zone and held around $72, $73. My thinking is that we might be making the right shoulder of a head and shoulders pattern here. You can see we had the this left shoulder is about $79, $80, and we're getting up toward that level, and then I think we might come back and test this $72, $73 zone, and then if it breaks, you will see this. In theory, you should see this break of the neckline, and you'll see another $5, $10 move. So, and then we'll come back this $60 to $65 zone, which has been the long-term support resistance zone. I think one thing to note is just the declining strength of this move. You know, it's been going for almost 3 years now, and you can see the volume has been declining. This is a 20-week moving average volume, and it's been declining, and so is the sort of the strength of the move. You can, as indicated by the relative strength, you can see this sort of lower highs. Generally, that's a sign that a move's very long in the tooth and due for a correction. So I'm looking for this $72, $73 zone to be tested again in the next week or two, and my thinking is it's more likely to break that and head back down to this $60 to $65 zone. This is a chart of Woolworths. It's another important sort of bellwether stock on the ASX. You can see that we've been trending up now for more than 3 years, and just in the last couple of weeks we've broken through this long-term trend line, and I'm predicting that we're sort of looking like we might come back up, and often when you have these long-term trends, when it's broken, you'll see it come back and retest the trend line and fail, and I'm thinking that's probably what's going to happen here. And then we're going to head back down and test this $32, $33 zone, sort of this interim support level. And if that doesn't hold, this long-term support at $31, I think is likely to come into play. Woolworths obviously not one that's very volatile, being sort of a defensive stock, but I think it's important sort of stock for the ASX to gauge sentiment. You can see that it's very sort of boring. I think volume-wise, there's not a whole lot of trend here. The one thing to note is sort of this relative strength. This is sort of a classic bearish divergence. So you've seen we've gone to a new high in April of this year, but the strength of the move is pretty weak, and it's quite a lot lower than this previous strength up here. So that's sort of a classic bearish divergence, and what you said tend to see at an end of a trend, and that, given that it's been going 2.5, 3 years as well, it's more than overdue for a correction. But obviously, Woolworths being a bit more defensive, any correction is probably not likely to be as significant as some of the other stocks on the ASX.